apologies, I'm back. Sorry, a bit of a technical issue. Okay, all right. Sorry about that. Okay, so again, I'll do a Q&A in a short while, so do hang on for that. But let me just summarize to you again, what are the key steps to investing successfully? Again, what I showed you, Amazon and Google and Microsoft and Viva, it doesn't mean you go out there and buy these stocks right now. Because remember, there are a few steps. Number one is to identify great stocks. But number two is to buy when they are undervalued. And I give you an idea, what's the intrinsic value, and be patient. Be patient to wait for the price to come to you. Don't chase the price. Wait for the price to come to you. If it doesn't, companies that will be at the right price. Number three is to make sure you build a low-risk diversified portfolio that will do well under any market condition. So when you have got a high-quality, highly profitable stocks, you don't have the fear, what if interest rates go up again? What if we have a recession? What if inflation flares up again? You don't care because these companies will continue to do well. But if you buy low-quality companies, then if interest rates go up again, inflation spikes, those stocks will get trashed. So make sure you got good companies in your portfolio. Yeah. Number four is when do we sell? Like I said, you only sell if there is a long-term structural change in the business, or if the price becomes ridiculously overpriced. For example, let's look at NVIDIA. Okay, I'll show you one more NVIDIA. Any guesses what's the intrinsic value of NVIDIA? $700 to $250. Okay. So my valuation range for NVIDIA is between 414 to 564. That's my valuation range. So right now it's at 628. It is slightly overpriced. And again, would I buy NVIDIA here? No. Right? So again, it is at a wave up. I wouldn't add it here. Again, you can see it's a wave up, wave down. Right now it's on a wave up. Okay. So could it still go up a bit more to 700? Yeah, possible. It could go up to $700, right? But the discipline is don't chase it. Don't chase it. I'll wait for it to retrace down to, I would say about 400 to 490. That would be a range where I would maybe add a bit more NVIDIA to what I have right now. But I wouldn't chase it right here. Okay. So for those of you who have not yet taken the Value Momentum Investing course, we're having a special offer for the VMI course as well as UIP. Let me take a minute or so to just run through the offer with you. So the Value Momentum Investing course has altogether over 10 lessons where you will learn stock market basics. So for those of you who know nothing about investing, you're a complete newbie. You don't even know what's a stock. You don't even know what's a PE ratio. You've got to start somewhere. So this course is where you start from the very basics to the very advanced techniques that I use every single day, right? So you're going to learn stock market basics, number one. Lesson two, how to invest in ETFs. So I did mention earlier on that if you don't want to pick individual companies, you can do very well buying ETFs, but you're going to learn all about how do you select the best ETFs for different things. So again, if you're looking at semiconductors, you can look at the semiconductor ETF for SOXX. SOXX. If you're looking at healthcare medical devices, the best ETF is IHI. If you're looking at cybersecurity, the best is IHK. Yeah? But again, in this course, you will learn the process of how I select the best ETFs for the different markets. If you want to invest in China, invest in India, all right, how do you select, again, the best ETFs in those markets? Lesson 5, oops, sorry. Lesson 3, the key steps to profitable investing. Lesson 4, you learn all about fundamental analysis. I go very deep, where you learn how to analyze any business. Okay, how do you analyze a business inside out to know, is it a great business? Or is it a mediocre business? Is it a risky business? So once you learn this, you will avoid the risky companies. You only buy the very, very resilient, consistent, and predictable companies that will do well in all economic situations. Lesson 5, all about stock valuation. You learn how to value stocks, how to calculate the intrinsic value. Lesson 6, all about technical analysis, how I read charts, how I identify buy levels, how I identify sell levels based on. Lesson 7, you learn my proprietary 7-step process of how to put any stock through the 7-step. Again, only buy companies that pass the 7 steps. Lesson 8, how to build a winning portfolio. So your portfolio has a combination of growth stocks, defensive stocks, dividend stocks, some cyclical stocks if you want, and some speculative growth stocks. Whether it's Palantir, or CrowdStrike, or what's the other one? UiPath, okay? Lesson 9, how I find investment opportunities, as well as exit rules. When to know when to sell a stock. Like, why did I sell Boeing? Why did I sell Disney? All right? And by the way, I just updated the curriculum. It is the latest update you're going to get. So I also show you how I use a lot of AI tools to do stock investment research. Yeah. Lesson 10, psychology. I can tell you a big part of your success is psychology. There are many intelligent people, highly educated, with their master's degrees and all that. They can't make money in the markets because they've got the wrong temperament. Their psychology is all screwed up, right? So you're going to learn how to develop that winning psychology as an investor. And lesson 11, how to choose the right stockbroker, how to buy and sell using the brokerage platforms. And number 12, how do you turbocharge your portfolio using options? So I share how I use options to sell covered calls, cash secured puts to generate extra returns, right? So there are a few bonuses. Bonus 1, you get my trademark investing tools like the intrinsic value calculator, portfolio tracker, and portfolio dashboard to manage all your investments that you have. Bonus number 2, you get free lifetime access to students every day. 7 days a week, 18 hours a day, I'm there chatting with my students. You can ask questions anytime. I'll be there. Like Michael Jackson, in spirit. He's in spirit. All right. Okay, so for the VMI course, it's 12 lessons over 26 hours of recording. All right. Now, this is a on-demand course. So it's pre-recorded videos. Watch anytime, anywhere. You got lifetime access to these videos, which I update regularly. Okay. So that's worth $1899 and you get the trademark investing tools and the lifetime access to my private Discord chat group, and that is a total value of $3399. The normal cost fee for this package is $1899, and later you'll see that there's a special webinar additional discount as well, right? But usual is $1899 for the VMI course. Next is the UIP. So UIP, this is not a course. This is not a course. It is a subscription where you get to watch over my shoulder to see how I invest and trade every day. It's like being in the room with me. It's like being my apprentice, okay? So as part of UIP, I will do all the work for you. So basically, all the high quality stocks, every month, I will calculate the intrinsic value. You get access to all the intrinsic values, all the buy points, which I will update every month. And I'll do a deep dive research into all the stocks that I'm buying, that I'm watching. So every month you get 2 deep dive research reports. You get a deep dive analysis into the markets every month, as well as a deep dive into my portfolio. So every month I show you my portfolio, exactly what stocks I'm buying, what I'm holding, and the portfolio allocation. So you can see exactly how I manage a portfolio in real time. And there's also a separate private Discord channel for my UIP subscribers. So these are the monthly analysis of my portfolio, as you can see. Deep dive research into all the stocks, and you get, again, all the instant notifications of my buys and sells and trades, right? So this is an example of just added MasterCard on the 25th of March, 2 days before the bottom of COVID, added Bank of America on the 30th of March, added Facebook on the 30th of March, right? So I buy not at the bottom, I didn't buy right on the 23rd of March, but I buy near the bottoms of crashes, okay? So earlier this year, I sold McDonald's at 291, 19 May, that was my alert to my subscribers, sold my McDonald's shares, and then 7 October, I bought it back at 240, right? That was my rebuy back. Why? Look at that, right? Wave up, wave down, wave up, wave down, wave up, wave down, wave up, sold there, wave down, bought it back here. All right, so I explain why I'm buying, why I'm selling, so you understand how I think, so that my goal for you is not to follow me forever. My goal is you learn how I think, my thought process, so you begin to have that same thought process. And you learn how to fish for yourself for the rest of your life. So you have this skill, this investing skill, that for the rest of your life is going to help you to grow your wealth. That you can teach to your children, you can teach to your family, right? And this was LVMH, right? When I first got in, I first alerted my students, my subscribers, on the 7th of September last year, right? When you can see it was waving down here, and then once it hit, we entered here, and right now it's here. Okay. Can you just subscribe to UIP only? Yes, you can, right? Yes, you can just subscribe to UIP, but I always suggest that you should learn the course when you subscribe to UIP, because if you just subscribe to UIP and and you see my option trades every day, you'll be like, why is he doing that? Why does he do that? Right? But if you take the course, then you know. And the investing course and the options course is like, you come to my cooking school. I show you and I teach you how to cook. And you learn how I put in the ingredients and how I marinate and stuff like that. UIP is you watch me cook every day. And I cook all the food, right? So it's good that you come to the cooking school and then at the same time watch how I cook, right? That gives you the best results, basically, right? This is Eric. Thank you, Adam and UIP members. Thanks to Adam's advice and, more importantly, psychological training, my personal portfolio is up 40% year to date. Some is contributed perhaps 10%, but Adam also teaches us to keep our jobs or businesses and keep putting more into investments, right? Right. So these are all our students who have shared this. Anthony from Australia, up 40% year to date versus the S&P. This was last year, by the way. Okay, right. This was, as of May, right? But by end of the year, I think Anthony was up over, if I'm not wrong, I think he was up over what, 80%? This Daryl up 80% last year as well, right? My UIP stock portfolio up 85%, right? This Adeline, and all these are my students, my subscribers over the years, right? So for UIP, the total value that you're going to get is over 6,007 in value, right? But the subscription fee is 1,009 US dollars by itself. All right. We are having a special Outlook sale where you get both the Whale investor course and the UIP both together for only 1,519. That's it. It's a steal, right? It's a great deal. 1,519 for both the investor cost and UIP. So that's 60% off, because usually you add it together a la carte, it's 3,799. So if you want to grab this offer, scan this QR code, or you can click on this link that will be on the Zoom chat, and you can grab your offer right here, right now. All right, so I'll give you a couple of minutes to grab this offer, and in a short while, I'll do a Q&A session. Yeah. Yeah, so just remember that this Whale investor course is a pre-recorded on-demand course, right? So the videos are videos are updated regularly with the latest examples and stuff like that. Yeah. Now, some additional bonuses for those of you who enroll right now would be, number one, you will get a free lifetime subscription to my monthly investment newsletter, and you get additional free 2-month subscription to UIP. So that's a 14-month subscription to UIP for those who enroll in this webinar, right? So I know some of you have questions like, I just want to get the UIP because I've done the Whale investor course. No worries, let my team know and they'll give you a special deal as well if you just want to go for UIP. If you've already taken the Whale course or you've taken the live investor masterclass. Oh, all right. So I think I've got an additional slide for you guys. Hold on, give me a second here. Oh yeah, okay. So if you just want to get the UIP alone, then it is 1,330 only, right? 1,330 only. That's 30% of the usual price. So again, you can scan the QR code or click on it, and you get a free additional 1-month subscription to UIP if you just purchase the UIP subscription, right? Yep. So that's for those of you who just want to get the UIP. So again, for the stock investor bundle, which is the Whale course and UIP, remember it is 1,519.60. So 60% off this special webinar. So scan a QR code or click on the link to grab your offer. Yeah. Okay, so while you guys are enrolling, if you have not yet enrolled, I'll do my best to answer as many questions as I can. Okay. Gwen is asking, will the TLT bond ETF ever go up again? How low will it go? All right. So questions like that, remember, I can't predict. I can't predict, but I already sold my TLT. I already took profit. I made a lot of money from it. If I just show you the TLT, this is the long-term bond ETF, right? So I bought it here, right? For those of you who are in my UIP, you get my live buy and sell alerts. I bought it right there, and then I sold half here, and I sold the other half here. Yeah, so I took very nice profits here. And I'm looking to buy it back, but I'm still waiting for entry signal on TLT. So I don't yet have an entry signal. You can see right now it is now below the 200-day moving average, right? So right now it's kind of like consolidating here at this level here, right? Oh, sorry, I just added a bit. I just forgot. I just added a bit back a week ago, right? Yeah, I just bought a bit here, right? Because right now this could be a support here, right? So I'm waiting for it to bounce. Actually, I'm waiting for it to bounce, but I have a stop loss at the stop loss 93. So if it drops 93, I will cut loss on this because it's a short-term trade, right? But I already had a lot of profits here. I took a lot of profits here, so I re-entered here and waiting for a bounce. If not, I'll cut loss at 93. So that's for TLT. Aloysius is asking, semiconductors seem to be a huge driver for this innovation wave. What do you think of Applied Materials? Applied Materials is okay. It's a pretty good business. But again, there are so many great companies. So will Applied Materials be my number one pick? No. But is it a good business? Yes, I think it's a pretty good business. Why Adam doesn't invest in crypto? Because I think crypto is a scam. Yeah, seriously, I think it's a scam. But you can make money from it. Like I said, crypto is something that it's a greater fool's game. It's a greater fool's game. Crypto itself is not worth anything, all right, except for money laundering, all right. But could it go up? Yeah, because it's all hype, right? It's like companies that don't make money but go up on crypto. You are a fool, but it's okay as long as you can sell it to a bigger fool than you, and that bigger fool who buys it must then sell it to an even bigger fool, and the bigger fool must sell it to an even bigger fool, right? And the game goes on until the last fool holds it and becomes worthless, right? So could you trade crypto? Yes. Could you make money from crypto? Yes. I'm not saying you can't, but I don't buy anything that has no intrinsic value. I don't buy something that has no productive, that is non-productive, right? So that's just me, okay? Again, you can disagree with me, it's fine, but I'm a guy who's very, very conservative. I don't like to buy something, I like to buy something that by itself produces cash flow. That's why I buy real estate, I buy companies because they produce cash flow, right? But crypto itself doesn't produce anything. It's just a greater fool's game that you're playing. Which, again, I'm not saying you cannot make money. You can make a lot of money, but you got to get in and get out and make sure you're not the biggest fool in the end. And if you want to learn about crypto, learn it from Elson Chu because he's made a lot of money in crypto and he's great at trading crypto. But it's not something that I am comfortable with buying. Right? It's just me. Right? Call me an old man, call me a dinosaur, call me a boomer. That's who I am. Right? Yeah, I'm a chicken. Okay. So, what is gold? Gold is also a non-productive asset. So gold is something that's totally speculative, but gold at least has some utility that you can touch it, you can make things with it, right? Are there any good high income growth ETFs? You know, if you're just interested in ETFs, I give you an example, like my two daughters, they are both having their brokerage account because they just above 18 recently. So for my two daughters, they are not so interested to pick stocks like me. So for them, I just get them to buy the triple Q ETF. That's it. I told them, I said, that's all they need. If they just buy the triple Q ETF and hold it for the next 10, 20 years, they'll be multimillionaires, right? Without me. Okay. Stella is saying, I sold 50% of my funds last year due to the fear of the recession. Now my funds 10% higher than my sold price. If Adam, you or me, will you use the money to buy back into the stock market? yes, I'll buy it back, Stella, but I won't buy it back now because, like I said, right now it's like a wave up. I'll wait for February or March. Hopefully, by the time if the market can drop 5-10%, I'll use that to buy back into the market. All right. How do you think Timo will affect Amazon's business? Oh, please. I don't think it's going to affect it at all. Amazon's business, again, Amazon has got 5 businesses, right? So I don't think it's going to be any threat. Kim is asking, now you have decided to exit your China exposure. When it rebounds, do you consider investing in India instead? I could, but here's the thing, right? So I always believe that you should buy things that you understand, that you have a competitive edge, right? So I don't understand Indian companies because I don't use the products. I like to buy companies where I use the products or I understand the products very well. So there could be many great Indian companies. I don't deny it, great Indian companies, but I don't understand the market, right? Although I love going to India, I've been to India 6 times actually. I've been to all parts of India, but I don't understand it as well as but if I was living in India, sure, I would probably buy Indian stock, but I don't understand it, right? So I just focus on US, which I understand very well because I eat at McDonald's, I use Visa, I use MasterCard, I use Apple computers. I use all these products. So, it gives me the confidence to buy what I know, basically, okay? Okay, Helen is asking for financials. Why Visa and MasterCard grow a lot this year? It's not just this year, Helen. Visa and MasterCard are 2 of the best companies in the financial sector. They will continue to grow for decades and decades, and that's why they are both in my portfolio, right? Because as more and more people make payments digitally, Visa and MasterCard will just keep growing and growing. Okay. How about the robotics sector? Yeah, robotics sector is still very new. So I don't have any specific company which I think is high quality in the robotic space. So that's why I don't mention it. Okay, let me see. It's just so many questions. I can't answer all of them, but let me just pick the ones which I think are the most relevant to all of you. What is my outlook on China, right? I just made a video on YouTube about the US and the China market. So do watch it. I just released it a few days. It's so cheap. I do expect it to rebound, but whether the rebound will be sustainable and for how long is something I just can't predict. But it should rebound by this year. If it doesn't, then well, maybe next year. But it's not something I want to hold for the long run. Is my stock investment cost applicable to the Chinese market? My investment cost is applicable to every market because the principles for investing, it applies to any company, whether it's an Indian company or Chinese company or European company. It's the same steps. It's the same analysis regardless of what type of company. So whether I'm buying Chinese company, Indian company, American company, it must pass the 7 steps. It must pass the 7 steps. If it passes the 7 steps, then you can buy it, regardless of European or Indian or Chinese or American, right? But you find that most of the companies that can pass the 7 steps are US companies. Most of the other companies like in Singapore or whatever, very few can pass the 7 steps because my 7 steps are very strict criteria. Very strict criteria. Krishna, you want to learn how to use options? Yeah, you can learn options in the options course where we teach you over 18 option strategies depending on the size of your account. We've got option strategies for small accounts, for medium accounts, for large accounts, right? So you can learn it all there. Okay, we've got Liang asking, I'm currently serving a housing. Should I repay my house faster, which may end up little or no funds for investment, or should I just continue with monthly loan? Well, again, I'm not a financial advisor, so I can't give you advice on what to do. But for me personally, I will ask myself this question. If I invest in the stock market, can I make more than 4%? If I'm confident I can make more than 4%, which is the interest I'm paying on my housing loan, then I would not want to fully pay off my housing loan or to only use my funds to pay off my housing loan. I want to have some of it in the markets, in the stock markets, where I know I can get more than 4%. For me personally, I know I can get 20, 30% a year on average. But having said that, I think it's all about a balance. So would I want to put everything I have into the stock market and not pay back my housing loan at all and just pay the minimum? No, I think it's a balance. I would like to slowly reduce my housing loan, but at the same time also invest. So I think it's about a balance here and not all into one thing. Okay, what's my outlook for Adobe in 2024? I think Adobe will continue to outperform. So Kai is asking if I have Chinese stocks that should I sell at a loss of 40 to 50% or be patient for another 2 years to wait for them to recover? Well, for me personally, I still got my Chinese stocks and I'm just holding it, right? But it makes up 4% of my portfolio right now. What is my biggest mistake? But I've made many mistakes along the way. And I think I've already mentioned many of my mistakes, so many of them. But I would say one of the mistakes I made in the past was cutting the flowers and watering the weeds, which I mentioned earlier on, right? Where I got a stock that I bought that went up 50%, and I was so happy I sold it when it was up 50%, and I used that money to buy more of the stock that went down 50%. And that was one of the mistakes I made in the past. So now I realize that even if a stock is up 200, 300, 400%, I should not sell it. As long as it continues to grow and it is not crazy overpriced, let it run. The funny thing is everyone says they want to buy a stock that goes up 10 times, 20 times. Right? Everyone wants that. But you can't get a 10 to 20 times return if you sell when the stock is up 50%. Right? You got to be willing to let it run. And that's one of the many lessons I learned. Mark is asking, why do I keep buying this way? I didn't buy more. Why does Buffett keep buying Occidental Petroleum? I have got no idea, Mark. I've got no idea, right? So as much as I admire Warren Buffett, there are many things he does that doesn't make sense to me. Like, why does he buy oil companies? I don't know. I'll never buy energy companies. Why did Warren Buffett buy General Motors? I got no idea. I'll never buy a car company. Why did Warren Buffett buy the airlines and then sell it for loss? I got no idea. I'll never buy airlines, What's my opinion about Malaysia's stock market? Okay, Daniel, right? I love Malaysia. I love Malaysian food. I love Malaysian people. Stock market, Malaysia. I've got nothing to say. I wouldn't touch it. Datadog and Snowflake, Bruno is asking, they are not consistently profitable. Can you please share about Indian market? Like I said, I'm not an expert on Indian companies, so I've got no idea, man. I only just like Indian food. Okay. Ivy, I'm very skeptical about the market. I think we may go through another terrible bear market. Yeah. So Ivy, if you keep having this mindset, then you never invest for the rest of your life. Right? That's all I can say to you. Right? Because the market's gonna crash, we're gonna die. Then you never buy, right? Okay. So adding on to that question, let me show you some charts. Okay. Let me show you some charts here. If Ivy is still around, watch this Ivy. Look at this Ivy, okay? Now, I've showed this chart before, and for those of you who are new to this, let me explain it. Now, let me ask you this. Is holding cash safer or holding stock safer? The answer is it depends on your time frame. It depends on your time frame. In the short-term time frame, in 1 or 2 years, then of course cash is safer than holding stocks. So I always tell people this, that if you need to use the money in the next 12 months or the next 24 months, please don't invest it. Do not invest it. Keep it in cash. Put in fixed deposit, because in the short term, anything can happen. Anything can happen. So for example, in 2022, what happened? The stock market crashed in a bear market, right? So if you put your money in the stock market, it went down 18% that year. But if you held in cash and you put into fixed deposit or short-term treasury bills, then you'll be up 1%, all right? So then stocks. But in the long term, in 5 years, 10 years, 15 years, in the long run, the longer you hold cash, the more risky it is. And the longer you hold stocks, the safer it is. Why? Because in the long run, if you just hold cash and you never dare to invest in the stock market because you think the crash is coming, then you can see over 10 years, your wealth increased only 11% in 10 years, which is about 1% a year. Can you beat inflation? No, you can't. And you find that in the long run, you can never retire because you will never have enough wealth to ever retire. You will never have enough money to be financially secure and be financially free. And in the future, when things get so expensive, when a car in Singapore becomes $1 million, don't laugh, it will happen. A car in Singapore will become $1 million. A HDB flat is already 1.5 million in Toa Payoh. One day a HDB flat will be $5 million. It will happen in the future. And when that happens in your future and you put all your money in cash, you can't survive in Singapore. You can't survive in America, okay? But in the stock market, yes, in the short term, it goes up and down. Bear market crash, bear market crash, bear market crash. There will be crashes along the way. But in the long run, through the ups and downs, you can see that your money will grow at 210%. This in the last 10 years versus 11% in cash. Okay? Now, people always afraid, well, the market is going to crash. When the market crashes, the buy. Hey, even if you are so unlucky and you bought here before the crash, or you bought here before the crash, or you bought here before, even if you buy at the top before the crash, in the end, you are still better than the person who did not even buy at all. Do you understand? Does this make sense? Let me show you this chart as well, okay? Even if you're the worst timer in the market, it's still better than procrastinating and not staying and not even getting in, right? So if you look at, from this is a 20-year period, okay? Because I think most of you, right, you would have at least 10 to 20 years to retirement, okay, or more, okay, or more, right? Imagine if you decide to invest $2,000 into the stock market every year, and you had perfect timing, you are God. Every year you can buy it right at the bottom. If you can buy at the bottom every year, after 20 years, you would grow your money to $151,000. Okay, but of course we know that's not possible, right? If you simply invest immediately, which means every year you put in $2,000 in January, you end up with 135,000, which is lower than that, but it's still not bad. Now, if you did dollar cost averaging, which means you divide your $2,000 into 12 months, so that's $167 a month. So every month you put in $167, you end up with 134,000, which is about the same as this guy going all in at the beginning, right? Now, even if you're the most unlucky person in the world and you have very bad timing, so you invest 2,000 at the top every year, at the highest point every year, in the end, you are getting less than these guys, but you are still growing your money well. But because you think that the market will crash next year, that is going to be a disaster, then you are the worst off. Because if you always think, I will invest when the market gets lower, you always want to buy the bottom, you always think the crash is coming, in the end, you'll be the biggest loser. All right, so remember this lesson. Yeah? Okay, so I think more or less I have answered most of your questions. And again, do take advantage of this special offer we have today. So whale course plus UIP is only 1519. That's 60% off for this webinar special. Scan this QR code, click on the link and grab it. All right, so I'll spend the last few minutes just to finish the last few questions. Boon Y Eng saying you don't short the market, is buying a put option. Yeah, same thing. Buying a put option, you're shorting the market, you're shorting the stock, right? Jesse's asking, what's my view on insurance companies? It's not bad, but insurance companies are pretty cyclical. But I like to buy United Health and Elevance Health, which is not pure insurance. Insurance is part of the business, but they also have the entire value chain of managed health care services that reduces the cyclicality of the insurance part of the business. Dev is asking, could you share your opinions about diversification of investments for 50% in individual stocks, 30%? That's fine, Dev. That sounds great. You can do that if you want to. That sounds perfectly rational. Why did I sell Boeing? Because I think Boeing is a company that I wouldn't dare to own. It's got too much execution risk. Suddenly the plane door fly out, the plane crash, the wheel drop. You read all that, right? So clearly there's something wrong with the business. And did you guys read yesterday what happened to Tesla? They have to recall 200,000 cars because there's a faulty rear view camera. And in China, Tesla had to recall all their cars because of some faulty software. So that's why in general, I don't like to invest in manufacturing companies, whether manufacturing car, manufacturing plane. I don't like these kind of companies because there's a lot of execution risk, right? The car door spoils, the plane crash, you got recall, and it costs billions of dollars, right? This doesn't happen to companies like Google. It doesn't happen to companies like Microsoft. It doesn't happen to companies like Amazon. So why do you want to give yourself so much problems buying these companies with so much execution risk when you can buy simple companies like McDonald's, where the McDonald's burger won't crash on the floor and the McDonald's door won't drop out, right? So make life easy for yourself. Buy companies that make money very easily, right? All right, so guys, thank you for joining me. We started at 11, now it's 12, 1, 2. Oh my God, it's like 3.5 hours. I don't believe I've been talking for 3.5 hours. I need to eat my lunch. So do you. Okay. Okay, so thanks for joining me, everyone, and have a wonderful weekend. And take care, and thank you for being here.